Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, October 24th, 5:28 p.m. Eastern Time, coming to you from the financial capital of the South. That, of course, is St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. You can see the trend gauge over here. Not perfect. We've still got the coveted four green arrows, but a little bit of pressure on our short-term indicators as the Dow, mid caps, and small caps have broken below the short-term 21-day moving average. All the major indexes still trending above the medium-term 50-day moving average and long-term 200-day moving average, and market leadership acting just fine. But a little, as we've seen, uh, underperformance by small and mid caps with the trigger higher in interest rates. This is the reason for the general weakness in breadth. And also, of course, that tends to hit mid and small uh, type names harder as they're normally have leveraged balance sheets, borrow money. Not always, of course, there's always exceptions, but generally speaking, it's hard for small caps to outperform in a rising interest rate environment. And although the Fed cut interest rates, that hasn't trickled through to the higher end of the curve. In fact, the 2 year even is up, I believe, 50 basis points, although we did get a little bit of relief today. So, what did happen today? Well, the story was really Tesla's huge earnings report move, up 22%, biggest move that it's had in years, and it's had a lot of big moves. It was not only the numbers, the margins, it was a lot of optimism by Elon Musk on the conference call. He does tend to overpromise and not meet timelines, but this is not a short squeeze. There was only a 3% short interest in the stock, but it gapped up about 14% and it just kept, didn't pull back, just kept trickling higher. The 5 minute intraday was a thing of beauty. We bought it after the gap up this morning and added to it as it moved higher. So that was really the story of the day that triggered XLY, which is consumer discretionary, and also the other tech sectors, XLK and XLC, positive relative strength today. The market itself, the S&P traded in a tight range, breadth not that good. Um, Lots going on. And these 2 weeks normally are bullish, but in election periods, there's some uncertainty, and they tend to be on the weak side leading into the election. A little bit, I've seen some mixed data. I've seen 1 week, 2 weeks prior to 1 week prior be negative, and then a couple of days start to rally in. We never know. We won't guess. We won't predict. We won't say one thing or another. We just observe what's going on, interpret the positive signs and the negative signs. Weigh the weight of the evidence is how Stan Weinstein used to refer to it, and that's what we do every day. But the weight of the evidence was firmly in Tesla's corner today. A couple of other nice moves up on earnings as well. Here were the final numbers. The 21 over 21 list had a good day, so leaders certainly participated. Although of our leaders, half were positive, half were negative of what we actually own. But 12 up, two neutral, seven down in the 21 over 21 list. The big eight, uh, obviously skewed by Tesla. If you include Tesla, the average was up 3.1%. The other seven up an average of 0.41%. The RG8s are a growth ETF composite led by ARK-K, whose biggest position is Tesla, up an average of 0.67. That's our eight growth ETF composite. S&P 500 opened up 0.25%, traded in a tight, a little more than a 0.5% range all day, closed basically where it opened up 0.21%. The equal weight S&P 500 lagged, however, just barely positive. NASDAQ 100, again, led by Tesla, up 0.81%. Equal weight below that significantly, up 0.32%. The Dow down 1/3%, the only one of the indexes that was negative on the day. Mid caps up 0.17, Russell 2000 small caps up 0.23. As I said, both of those three indexes that I just mentioned, the prior three closing below their 21. We'll take a look at those charts in a moment. Global diversified 60/40 stock and bond up 0.22%. Our flagship GROTECTION portfolio with a nice day up zero, relatively speaking, to the index is up 0.67%. We'll take a look at the tail of the tape and charts of interest, but let's start off as we normally do with the S&P 500 undercutting and reclaiming a 21-day yesterday, putting a line in the sand, as we've discussed in our team meetings and Ted highlighted in last night's video. Bounced at the 21-day again today, so testing it after the open, after the gap up. They did try to sell it off, but buyers came in. This is illustrated pretty good here on a 30-minute chart. Here's the breakout, and basically we're now, after being in a consolidation and then breaking out on October 9th, we've been in a 12-day consolidation since then, testing that 57.65-ish level. We undercut it yesterday, got back above 57.70. That 57.70 was also a support line here back on October 9th and October 10th when we were first trying to break out. But we do want to get back above this 58.10 to 58.20. That had been acting as support while we were bouncing around at this higher level before it broke on Wednesday's bearish action, although we did have a bullish close. The gap up today, again, tested that and held tight range, relatively speaking, today. Bulls, you want to see us get back above this 58.10, 58.20, and then challenge 58.70-ish and go to all-time highs. And again, line in the sand, do not want to close below. Worst case, 58.50-ish, but this looks like a shakeout bar at 57.70. This is on a 30-minute chart. This was on Wednesday. So we're above that, want to stay above that. All right, that's the S&P 500. Let's go back to the daily. You can see again, two touches of the 21-day moving average, but the 8-day has rolled over and has acted as resistance over the past 2 days. That's another thing that needs to be overcome by the bulls in short order. NASDAQ 100, the 8-day is acting as resistance there as well. Tight range, despite the big move up in Tesla. Didn't quite test the 21 today. Looks fine. Onto the Dow. Those are the two that are above the 21. So the Dow closed, undercut closed basically right on the flat 21 yesterday. 21 flattening out, acted as resistance to the Dow today. So its first close below that level, 42,000, definitely the key area to watch for the Dow. Now on to mid caps. Second day below, it finished positive on the day, but second close below the 21-day moving average, which is also rolling over. So this is a failed breakout above this 3145-ish level. 3200 acted as resistance. If you're a bull, you want to clear back above the 8-day moving average and take out that 3200 level. And the Russell 2000 small caps positive again on the day, but see how the 21 flattened out is acting as resistance. Bulls, you need to break back above there. And we never did get a clean breakout above this 2300 level. So the positive that we need to see is, in my opinion, actually, I don't ever, based on the inter-asset correlations that we've been seeing, we need some easing in interest rates and the dollar in order to see a positive impact on small and mid cap stocks. We kind of have a team rule that we don't predict, and I almost said, or have opinions, and that was my opinion. We interpret what's going on, but there's a difference between thinking something is going to go higher. We just need to interpret what's happening in the now, not make any guesses about what's going on down the road. Let's look at the equal weight S&P 500. That's sitting right on the 21-day moving average. All right, let's go to some inter-asset correlation. We'll start with the VIX. VIX down on the day. This says plus. I don't know how they calculate this, but the VIX was lower today by about 1%, under that 20 level, which is where we want it. Ideally, we want it to be under 16, and it did it. The market did its best work with the VIX all the way down in the 11s, quite a bit away from way away from there. But you never know with the quote unquote October surprises. leading into the election. I think that's why there's a bunch of hedging going on and elevated VIX. Although uh, the S&P does have its ATR below 1.0, which is what we want to see. All right, there's the VIX. Let's go to the dollar now. Dollar had been extremely strong, a little bit of a pullback today. So this 104 level, which had acted as resistance back through April, May, June, July, broke above it, pulled back, and tested it. This has been a pretty strong up move. Uh, Look for an undercut of this just because you normally give back uh, regression to the mean on a move like this in the dollar that has been so strong. But this 104 level is something that we're keeping an eye on as well. But we did get the pullback today, but it pulled just back to the pivot, so it's not a failed breakout. So keeping an eye on that going forward. Okay, that's the dollar. How did that trigger impact precious metals? Well, gold was higher. Nice on gold, riding the 8 EMA higher. Silver was basically flat, bounced at the 8 EMA, but a terrible reaction to the Newmont Mining earnings report, that's ticker NEM, had GDX down by 2.61%. So failed breakout about the above this recent level here. Did come back and just test it below the 8 EMA, still above the 21, so very healthy. But I didn't read any of the details on the report, but let's take a look at the chart very quickly, and you can see the reaction was not so good, down 15% on 4 times average volume. Massive. Actually, that's 5 times. 400% is 5 times average volume. All right, where are we on to now? How about Bitcoin? IBIT gapped up, held the gap, closed near the top of the range, back above the 8-day moving average, up 2.8%. And let's go to bonds. Uh, Slight tick up in bond prices, meaning a slight pullback in bond yields. The broad bond index up 0.16%. TLT, the long bond, up 0.64%. First time up into the declining 8 EMA since this was kind of an islandish one close above it before failing back below it last week. Let's go to the yield now, TYX. So you can see how strong this, kind of similar to the dollar, very strong, broke above this level, this 44 level, 3 days above it, pulling back, normal pullback so far, not a failed breakout. There's a lot of congestion over here in this 44 to 46 level back from June and July, which is where we are right now. So, and this has very clearly impacted small and mid caps. That's the TYX. Let's go to the 10-year, the TNX also pulling back for this 42 level is what we're watching there. All right, that's enough of inter-asset correlation. Let's go to the tail of the tape, the news, as I said, the huge Tesla ER move. So the keys coming into today, line in the sand support, 57.70. We pulled back to 57.84, 85, and held. So we're above there. The Qs, line in the sand, 485, above there. Long-term rates, certainly keeping an eye on that, and they were lower today. So that was beneficial to the market. So after a hard day one down yesterday, we're back into the consolidation, 12-day consolidation, closer to the bottom end of the range than we are to the top end. Second close below the now declining 8-day moving average. 21-day moving average, 31 days above on the S&P. The action today, after the gap up, made a high within the first 30 minutes. Let's take a look at this very quickly. And you can see the gap higher, no further progress, sideways for a couple of hours, came down, tested. This is where we were watching, worried about that line in the sand, didn't get there, bounced there, bounced off of that level, and then just a tight range in the afternoon as well. Foiling for a move. Is the move going to be up higher into the range, or is it going to be a breakdown of this 57.70 level? Well, we update our stops every day, so we're prepared either way. Back to the tail of the tape. Sectors today, outperformance at XLY, that's discretionary. It's based mostly on Tesla's move today. Banks, biotech, and gold higher to the downside. Gold stocks, transports, basic materials, utilities, and healthcare. Portfolio, bought Tesla twice, got a half size in that now, and trimmed Uber. So the positive news for Tesla him mentioning Elon mentioning robotaxis perceived as a negative for Uber. Recall Uber gapped up when Elon didn't go heavy on positive robotaxi news on the quote unquote robotaxi event. Uber moved higher. Uber's given up all that move and broke below the 21 today, so we're down to a quarter size position in that. Bottom line on the day. Oh, that upped our adjusted beta from 1.71 to 1.81. Bottom line on the day, Tesla's huge E-bar move, earnings report move, triggers relative strength in tech. Line in the sand was tested and holds, and it needs to continue to hold if you're a bull. Tomorrow, keys for Friday, continue to look at that line in the sand at 57.70, QQQ support at 485, and long-term rates. Let's go to some stocks now, and we'll start off with stock making the big news of the day. And we bought Tesla. And look at the 5 minute. They're just, you don't see this often, a gap up. And that first bar puts in the low, isn't even really challenged. That's extremely bullish. And just continued to buy all day long, breaking above 270, little pullback into the close and down 1% after hours after that move. But looking at it on the daily chart, you can see the massive volume. You can also see some of the big runs that Tesla has had. It goes on runs. I mean, this big was on euphoria of the announcement of a robotaxi event without any earnings report or anything like that. And then, its last earnings report, it gapped down. And then it delayed the robotaxi event again and moved lower, worked its way a little bit back higher. Had the robotaxi event, it was seen as a big yawn. That was this gap down here, went sideways after that, but recovering a lot of those losses today. And keep an eye on that 264.86 up and handle pivot. So let's take a look at the rest of the portfolio. And here we go. So we'll start off, we'll go through everything that we hold in the individual tickers that we hold. NVIDIA, just consolidating here at the top of this flat base. Kava continues to work its way higher, all-time high close today. Oracle, a little bit of a rest going sideways for the past 2 weeks. There's Uber breaking below the 21 average volume. See if the 21 continues to act as resistance or if it can clear back above it. MicroStrategy, just a beast with Bitcoin moving higher today. This moved up 10%. Constellation CEG pulling back, forming a tight range here, trapped between the declining 8 and the 21 day. Vertiv, after earnings yesterday, tightening up a bit, back above that 110 level. Maple Bear slash Instacart, two tight closes. Coherent pulling back, having a little bit of trouble with that 100 level after two downgrades in the last week. Astera Labs looks like it wants to break above this 70 level after bouncing back and forth between 60 and 70 over the last 2 weeks. We also in Bitcoin, we looked at this chart, CCJ, we bought this yesterday, pulled back for 4 days now. That's about far enough. We were giving it to the 21 and maybe a gap fill. It did go on an extremely big move higher, which we initially missed. Really should have bought this breakout here or a pullback to 50. Kept it on the watch list. We like the relative strength. We like the story. We like the 2025 earnings growth a whole lot as well. And then, of course, there's Tesla, and that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart. That would be dan@revereasset.com. And a reminder, our flagship portfolio, dual purpose, dual mandate, participate in market uptrends, grow capital that way. Things start to pull back. We get a little bit more defensive. Things break below this ugly black line here, the 200-day moving average. It's like a teenager after midnight. Nothing good happens below the 200-day moving average. That's when we are mostly either fully hedged or possibly short. And common sense approach. What other aspect of your life when things are going well? Do you not do more of the same? Things, problems pop up in life, you got to address them. We see your portfolio as no different. Wall Street, a massive conflict of interest with their products. They tell you to be in the market all the time. because they can only make money if you're in their products. We prove every night here on in these videos that you don't have to be. You can control your risk and also have nice returns as well. And with that, I'm going to wrap it for Thursday, October 24th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.